If you have ever spent hours staring at a trading chart, you already know the frustration of a cluttered screen. Most traders fall into the same trap. They start drawing random support and resistance levels. Then they add indicator after indicator, hoping something will finally work. But professional traders operate in a completely different way. Instead of guessing the market, they wait for the market to reveal its intentions. In this video, I'm going to show you a powerful intraday reversal strategy used by experienced traders to identify high-probability turning points in the market. This strategy uses only two tools, the LuxAlgo RLS Forecast and the Perky Smart Money Concepts Indicator. By combining statistical forecasting with smart money structure, we can identify potential reversal zones before the big move happens. You must understand the psychology behind market movements. Most retail traders react emotionally to price movements. When the market drops suddenly, fear takes control. Traders panic and sell immediately to avoid further losses. But this reaction often happens exactly where institutions are buying. Retail traders also chase breakouts after the move has already happened, which usually leads to entering at the worst possible moment. The result is a repeating cycle, buying high and selling low. Markets move primarily for one reason: liquidity. Liquidity represents areas where large numbers of orders exist. These zones often appear around obvious levels such as previous highs, previous lows, and key support or resistance areas. Professional traders and institutions understand this behavior. Instead of chasing price, they wait for price to reach these liquidity zones. Once liquidity is collected, the market often reverses sharply. To identify these reversal zones more clearly, this strategy uses two indicators. The first indicator is the LuxAlgo RLS Forecast. This tool uses statistical forecasting to estimate potential price direction. Instead of lagging behind the market, it attempts to predict future price movement. The second indicator is Perky Smart Money Concepts version 3. This indicator highlights institutional market structure, including order blocks, and changes in market behavior. The LuxAlgo RLS Forecast creates a dynamic channel around price. The upper band acts as a potential resistance area. The lower band acts as a potential support area. When price approaches the lower band, it often indicates that the market may be entering a high-probability reversal zone. Now, let's quickly set up these indicators on the chart. First, open your TradingView chart and click on the Indicators button at the top of the screen. In the search bar, type LuxAlgo RLS Forecast and select the indicator from the list. Once added, you will see the forecast bands appear around the price action. These bands create a dynamic channel that helps identify potential support and resistance zones. Next, go back to the Indicators menu again and search for Perky SMC version 3. Add it to the chart and you will immediately see smart money structure signals such as order blocks, structural shifts, and change of character labels. Once both indicators are added, your chart will now display both the statistical forecast zones and the smart money structure signals. This combination allows traders to clearly identify potential reversal areas in the market. The buy setup follows a simple four-step confirmation. First, a call signal must appear. Second, the signal candle should be green and contain a noticeable lower wick, indicating rejection of lower prices. Third, the Smart Money Concepts dashboard should display a bullish bias. Finally, price should be near the lower forecast band. When these conditions align, the probability of a bullish reversal increases significantly. The sell setup works in the opposite direction. First, a put signal must appear. Second, the signal candle should be red and contain an upper wick showing rejection of higher prices. Third, the Smart Money Concepts dashboard should indicate bearish structure. When these signals appear near the upper forecast band, the market often moves downward. Even the best strategy will fail without proper risk management. Professional traders focus on capital preservation above everything else. A common rule is to risk no more than 1 to 2% of total capital on a single trade. Before entering any trade, always define 3 things: your entry point, your stop loss, and your target. Most unprofitable traders overload their charts with unnecessary indicators, but the truth is that successful trading usually comes from clarity rather than complexity. By combining statistical forecasting with smart money market structure, this strategy provides a clear framework for identifying potential reversals. But remember one important truth: indicators do not make money, execution does. Focus on discipline, patience, and consistency, and your trading results will improve over time. Before we wrap up, if you found this strategy helpful, make sure to subscribe to the channel for more trading strategies, indicator tutorials, and real trading insights. I regularly share practical setups that traders can actually apply in real markets. Also, if you want to go deeper into trading strategies, I have created several detailed trading ebooks covering intraday trading setups, option strategies, technical indicators, and beginner guides. You can find all of them on my Gumroad page. The link is available in the description below. If you're serious about improving your trading knowledge, make sure to check them out. And as always, trade smart, manage your risk, and I'll see you in the next video.